Hi, this is Professor Barksdale with a mini lecture in Personal Finance MAT245. Today I'd like to emphasize the importance of credit score. As we all know, it's an indicator of your personal financial ability to manage debt, risk, and not only does it affect your ability to obtain loans such as mortgages and auto loans, but it also determines the amount that you pay for things such as auto insurance. And yes, it is legal in most states for an insurance company to determine your premiums based on your credit score and associated risk. I can't overemphasize the importance of managing your personal credit score. So if you have the ability to be aware of that score each month as it fluctuates and changes, please do so. Most credit card companies now have the option for you to view that score on your statement monthly at no charge. I want to emphasize a couple of important but probably unknown things that determine your personal credit score that can help you long term. Of course, things like making payments on time, those are vital and can comprise of a major component of your overall credit score. So that goes without saying, always pay your bills on time. That includes utilities, cable, anything that has a recurring charge is generally reported and aggregated into your credit score. Two important things are credit utilization, which determine your ability to repay. And that means, for example, if you have a credit line of $25,000 on a particular card, it's always safe not to charge more than 10% of that amount per month. For example, that would be $2,500 charge, and that assuming that you are repaying that at the end of the month and not revolving that over. So credit utilization means that you're not accessing more than 10% of the amount of credit that you have. So take a look each month on your statement and determine if you're actually reaching that threshold each month, even if you're paying that off. So that determines tells credit card companies actually about your ability to manage cash and your cash flow position. Another often unknown component is what you're actually purchasing using a credit card. This is totally legal. Yeah, it's a little creepy, but all the credit card companies know what items exactly you're purchasing. Several years ago, the Wall Street Journal did an in-depth investigative report on what items that are flagged for credit reports that are purchased by people who are deemed at high risk. It's very amazing. And yes, they do have the ability to do that. And it's sort of creepy when you think about it. But the top number 2 item that would send a red flag and would affect your credit score and tell your creditors that you're at high risk for either late payments, default, or bankruptcy. Number 2 item was purchasing generic motor oil at a convenience store. And oddly enough, the number 1 item, and this is really weird, was purchasing a skull gear shift knob for a manual transmission. Okay, yeah, that's weird, but just gives you an example of how intricately designed the credit companies have in their databases to determine things that are signals and red flags to them that you're going to either be late, default, or go bankrupt. Of course, since reading that article, I've become very paranoid. For example, at the checkout line at Lowe's, if I'm buying Drano, what I'll do is purchase the Drano with cash and then purchase the other maintenance items using my credit card. When do I buy Drano? I have 2 teenage daughters with very long, thick, beautiful hair, unlike myself, constantly clogging all the drains. So yeah, I do buy Drano by the gallon. So I'm not sure if Drano is on that list. In fact, this article didn't go in depth because they wanted to protect the the actual person who was revealing this information to them, so they didn't submit the entire list. But just keep in mind that not only how much we spend, but how much we spend and what we spend on it are factors that will determine what your credit score is. Thank you.